Thanks for checking out this video from NetPicks. Today we're going to talk about a momentum trading strategy, and one that I think that you may want to consider. And if you're talking about momentum traders, what they do is look for price movement that's heading for higher prices in a bull market, lower prices in a bear market. So the question really becomes, how do you know price is about to set up a momentum trade? Well, the easiest way to do that is to find an instrument, like a stock, that's in a consolidation phase. We can also call that a trading range. You would then look to trade the breakouts, anticipating more buyers or sellers stepping in, and perhaps adding to your position. So how do you find these types of potential momentum stocks to trade? There are a few indicators that you can use to find a trading range. You can use chart patterns like triangles to find price movement that's compressing. You then look to trade the breaks, and it's not just any break. You want to see momentum coming into the market. However, trading indicators, they do simplify finding these types of price conditions. So if you're talking about moving averages, well, the simplest way is to look for coiling price action around a moving average like a 20 EMA. Your price actions whipping back and forth around a central price point. Now, there's no sustained trend direction, right? But you can define support and resistance levels. So when price breaches the horizontal line, you can just determine how to enter the market. Well, the main issue with moving averages is they do not truly reflect volatility. So for momentum trades, we want to have a measure of volatility that tells us if volatility is present or not. So for that purpose, moving averages don't cut it. So a popular indicator is the RSI. It's generally used to show overbought or oversold conditions. Now, just using the 50 line, we can use the RSI much in the same way as we do the moving average. So on this chart here, the RSI is not hitting either oversold or overbought levels. The line is just essentially hugging that middle line, which is 50. And when you see that, you can just determine that price is not trending. But the same issues apply to the RSI. We want to see a market with low volatility and low momentum moving to higher momentum and volatility. One of the favorite ways that I have to better read momentum, or lack of, is using the TTM squeeze. Now, this indicator takes basically the Keltner channel and the Bollinger Band indicators and combines them into one. And when we use this indicator, we can see when momentum is present in the market and not present, the direction of the trend. We can use which direction price momentum is headed, and we can actually see the moment when volatility may be picking up. So a momentum trading strategy that uses the TTM squeeze, in my opinion, makes it a more objective way to trade. So the red dots, that just shows you when the market is more of a consolidation phase, right? A range. The green dots show when volatility momentum is increasing and a momentum trade could be forming. The histogram is going to show the momentum trend direction. So above the line it's bullish, below the line is bearish. And when you see rising or falling histogram bars, that shows an increase or a decrease in momentum. It's a pretty simple indicator to read, and really at a glance you can decide if the instrument that you're looking at is even worth trading. So whether you day trade or swing trade, this indicator can be used as part of any momentum strategy. So we can use this indicator to give us a signal as to the state of the market. And of course, we're going to add in price action to assist us in getting in and out of a trade. So this is a day trading example. It's a 15-minute time frame, and we're going to look to set up a short trade. So breaking this down, at number one, price has just come in from an uptrend in price. The histogram's getting smaller, which tells us momentum is running out of steam. When we see the red dots, we are in a low momentum state at number two. Those horizontal lines at 3 contain both swing lows and swing highs, so we're essentially in a trading range. At number 4, the dots turn green. And I have zoomed in, however, on this chart to make it look better. But if we scrunched it up normally, the lower histogram is actually starting to move lower at those first and second green dots. At number 5, you can enter the trade on the horizontal line when it breaks. So in this case, price actually formed a smaller range, and you could enter a bearish position when it breaks out. And you would expect the downward trend to continue. So as long as you see the histogram moving higher for bull markets or lower for bear, strong momentum could be at play. So you want to learn how to ride those moves. You can actually use price action to see a trading range. It's not that difficult. So when a market's no longer putting in a trending structure of higher highs and higher lows, or lower highs and lower lows for a downtrend, you're looking at a trading range. So let's talk about taking a long position. So we're going to look for the stock to consolidate, and we're going to use the TTM to confirm both the consolidation and the return of momentum. So the stock market has many stocks to choose from, and using the TTM squeeze on a quick scan, I found this price chart of Pfizer. Price continued to climb, and then we found ourselves in declining momentum. So number one, the red dots indicate really low momentum, and we can draw two horizontal lines that contain the price action. At two, we see the red dots go away, but we did not see higher price outside of our lines. And now you see at number two, the squeeze signal is back on again after those series of green. So we're waiting for a break of those lines. At number three, we did see a series of green dots, but just like we saw earlier, we never saw higher prices. So here, the red is back on while price was just under resistance. Now, when you see price basing below resistance, as you do at number three, or above support, that's a sign that a breakout could be near. Now, at the arrow, we see momentum increasing. The dots have turned green. Price breaks out above the horizontal resistance line. A one red candle pullback could be your entry, and the upward trend just resumes. Now, there are certain price patterns that I actually prefer. They're pretty obvious to see, and that's basically flags and triangles. So let's use a day trader's time frame here. It's 5 minutes. So the triangle chart pattern is just a series of lower highs and higher lows, and it's going to often continue into an apex where price is compressed. That's the area where the lines have converged. That's the apex. So in this example, a trader can look at the red dots. They can see the instrument is in consolidation. The squeeze is on. Look up at price. The consolidation alert via the TTM is confirmed with the chart pattern. Any successful trader knows that to be successful, you have to know when you're going to exit a trade in a bull or a bear market. Honestly, exits are a lesson all by themselves, but let's just touch on a simple approach. Use average true range and or reward to risk ratio. So using the ATR, you would simply calculate 1 or 2 times the ATR for that period. Your stop can be set that distance from entry. When we look at reward to risk ratios, you would simply exit your position or scale out at 1, 2, or 3 times your initial risk. Nice and simple. Quick conclusion here. I think it's a solid approach using the TTM to find consolidation patterns. I think when you wrap in proper risk management, your exits, your entries, you got to put those in your trading plan. I think you could find a little bit of success with this depending on how you approach it. But keep in mind, again, like all indicators, they lag price. So ensure that the price action is monitored because you want to see that price is confirming what you're seeing via the technical indicators. And just be on alert for any strong adverse moves against you with any position you have. That's it. Nice and short, nice and simple. Hit like, hit subscribe. Any questions, put them below, and we'll talk to you soon.